What's up, guys? Thanks for joining. My name is Zevi Shafran, and thank you for checking into the channel today. We have a special guest here. I've actually been asking him for a little while to join us, so he finally did. Thumbs up. This is Quentin. He's a CPA, and the reason I thought it'd be wonderful to have you here is because a lot of our viewers and subscribers are actually self-employed, to my knowledge, and they're real estate investors. And them, just like myself, would love the opportunity to know what are the best structures when buying real estate to take ownership to a property. What's the benefits of potentially owning a property in an S-Corp versus an LLC, or maybe just under your name, and then maybe like the different tips and tricks that you can think of that you could share with us. So with that.
Hi, my name is Quentin Staples. I'm a CPA in Los Angeles. And I've been doing this for 20 years at this point. I started when I was 18 at H&R Block.
Wow.
Scaring the crap out of everybody because I looked like I was 15 and signing up to do your taxes.
You still look young, man. I
honestly
wouldn't have guessed 20 years, but there you go.
Yeah, 39, started at 18. So my 20th tax season just passed.
Amazing. And let me ask you a question.
Mm-hmm.
Do you think it's different, because we're based out of LA, California. Do you think it's different in terms of the kind of clientele and the type of business that we see out here, like especially in LA, in terms of structure?
I mean, in California
Mm-hmm.
is a really different state amongst all the other states because we have the highest business taxes. So in California, whatever entity you have, whether it's an S-Corp, a C-Corp, or an LLC, minimum $800 per year.
Right.
You go anywhere else. Now, I'm not 100% on every state, but the closest I've seen is Massachusetts. $234.
Wow, I mean, that's a pretty massive difference between $800 to $234.
New York is $25.
Wow.
And so it's a huge difference here versus anywhere else.
So let me ask you this question. I'm thinking about opening a company now, right? And so we can actually touch on two things which I think are super important. And the reason I say that is because unlike Quentin, who actually prepares your tax returns, most of the deals that we do are tax return deals, meaning that we do have to analyze the returns. And so when we actually deal with a self-employed borrower, which is actually most of our borrowers, we see the structure of the business. And from my experience, most of my self-employed borrowers have been running S-Corps. Is that the most typical structure based on what you see for a corporation? And if so, like, why?
So what I like to say, and my rule of thumb for everybody is if you're going to run a business, run it out of an S-Corp.
Okay.
If you're going to own an asset, own it out of an LLC.
Okay, that's perfect, because that's honestly a segue into what I wanted to get into. Why am I starting a business in an S-Corp?
An S-Corp, because the biggest difference is if you're the only owner in an LLC, it doesn't exist for tax purposes.
Okay.
It has no tax benefits. It doesn't do anything, and especially in California, all it does is add $800 minimum tax every year. And again, for single member LLCs, there's no tax return. Most people run things sloppily.
Right.
So they're just not good. They're not giving you almost any benefit, and definitely no tax benefits from an LLC single member.
So now moving over to, let's talk about the business just for a second. What kind of benefits am I actually getting by having an S corporation?
With an S Corp, even if you're the only owner, it's a separate tax return.
Okay.
And it avoids self-employment tax, which is if your net income from a business is $100,000,
okay,
you're going to pay a little over $15,000 in self-employment tax. S-Corp is technically zero, though you are required to run a salary where you would pay self-employment tax on the salary portion. So now if you make $100,000 and you take a salary that is $30,000, $40,000,
Sure.
you're avoiding the self-employment tax on that difference of $50,000, $60,000.
Got it.
So, and that saves you 15% of that. So,
That's pretty huge.
and at $50,000, that's $7,500 less tax you're paying. Okay, so there's a clarification here. Is I'm saying there's no self-employment tax.
Self-employment tax.
So self-employment tax is 15% Social Security and Medicare that you pay as both the employee and the employer.
Sure, you match.
And so, because you're your own employer, you're paying it all.
Right.
So you pay self-employment tax,
Mhm.
plus you pay income tax.
Got it.
So on your $100,000,
Mhm.
if you're an LLC, single member, sole proprietor, whatever it is,
Yeah.
you're gonna pay $15,000 plus be taxed on $100,000. Then you get your deductions for your mortgage and this and that
Sure.
and all those other things. As an S-Corp, you're just income tax on $100,000. And whatever portion you called salary will have that additional 15%.
Makes perfect sense. Now, if you compare that to a partnership, right, of people investing in an asset like real estate, and these people form an LLC, right, a limited liability company, how would that structure be different when you are buying investment property, in terms of benefit? Because if I was going to buy an asset and I know that, I got like two other partners in it and each one of us 33% partner, I'm not really running a company, right? I'm just holding on to an asset, so just a holding company?
Yes. So, well, that's why with assets, it's good to have them in LLCs because typically the income coming from them is rental. Rental income you don't pay self-employment tax on regardless. So having it in an LLC is great. And
Right.
then with an LLC, just because you own 30% or 33, you can allocate it based on different rules for whatever you agree to. You can agree to whatever split you want. If you put up half the money, but you're helping a friend out,
Sure.
you want to own 30%, but you want to still make sure you're allocated your share of the 50% you put in. You can do things like that. That gives the friends opportunity for sweat equity. You both put in money for the business, I can earn my way into it. And so that's why LLCs, because you can have different agreements. And again, with LLCs, there's also better transfer rules. So if you're gonna pass it between you and your kids, so you get hit by a bus, your kids are inheriting the property.
Got it.
If you own a piece of property in an S-Corp, it stays the same. So you bought the property for $100,000.
Okay.
You've depreciated it down to zero over all the years.
Yeah.
You have no basis in that property anymore. Your kids inherit it in S-Corp. There's no tax basis in there for depreciation. But if you own it in an LLC, now that property is worth $200,000 after all these years. They get to depreciate it at $200,000 worth of property value.
Got it.
So in an LLC, you get that step up in basis.
When you set up a corporation, do all of them start as a C corporation, and then you have to request to be an
Yes.
S corporation?
Yes.
So that's normal, right?
That's normal. That is how it always is. So you go to whatever state you're in.
Okay.
You file with the Secretary of State.
Okay.
Here's my articles of incorporation. You are by definition a C-Corp,
Got it.
which is especially in California, a terrible status to be unless you have certain purposes. There's very few reasons why you would want to be in current tax law a C-Corp, but you always have to file a 2553 and become an S-Corporation.
So just to get this straight, I file my articles, I request to be a corporation, I'm immediately a C corporation, and now I have to request from the Secretary of State,
No, you request from the IRS to become
from
an
the
S-Corp.
IRS, to become an S corporation.
Yes.
Got it. Okay.
And that is honestly 90% of the time the best business structure, again, for running a business.
Do you think most businesses need a bookkeeper? And what is a bookkeeper? Like, what do they even do?
Bookkeepers are organizers. if you're not terrible with a computer, you can use QuickBooks. It imports all the data from the bank, and then you know what you spent.
Sure.
You know what you spent better than anybody else. So if you go to Target, you know what you bought.
Right.
I don't know what you bought. I have to ask you for the receipt, and now you're paying me hourly to go, hey Zevi, can I have that receipt? What did you buy? Here's a list of all these things. I don't know where you spent your money, and now you're paying me to have you do my job anyway.
So basically, just a quick software like a QuickBooks type of a deal keeps your company organized. Most of it, from my experience, is obviously if it's not business related, I don't tie it to my business.
Yeah.
If it is business related, then I can simply, the transaction automatically syncs in with my software, and I just label it whatever it was pertaining to my business. And at the end of the year, which I think is key, what I do like about it, which is I think a huge point, is that I can simply send the link or just put your email address in my software.
Yes.
And then you come in and you see everything that I've done. So there's very little communication of sensitive documents via email and all that. You can literally just go in, see my work, and start working on it, right?
Correct. In a basic sense, you don't have a ton of transactions. You might have high dollar amounts, you might have this and that, and it takes you 20 minutes, a month
at best. I mean, to kind of tie it, with a bow, we obviously touched that an S-Corporation is likely the best way to do business, at least here in California, okay?
Everywhere.
Or everywhere.
It's the best way to run a business when you're doing something or having other people do something. So if you're managing a property, run the management company out of an S-Corp. If you're owning a property, own it in LLC because it's easier to transfer.
I love that. If you're doing anything as a DBA, which is doing... no one really does that, or I don't see a lot of that anymore, but I'm saying doing business as, it's pretty much a name of a company in lieu of your name. So you're pretty much 100% exposed to everything, and you're writing that off on a sole proprietor, Schedule C, which actually I once asked somebody, how many owners could there be to a sole proprietor Schedule C? And it's a kind of maybe a tax joke, but there's only one social security number next to the name, so there can only be one.
Only one.
But I thank you a lot for joining today, okay? And what I'm actually gonna do, I'm gonna put somewhere in this screen over here Quentin's info, because he's honestly awesome, really, really super knowledgeable. And if you guys, of course, if you guys have any comments or questions, put them in the comments below, ask away, and he'll be happy to answer. If you like the video, please give it a big thumbs up, subscribe to the channel, and we'll catch you guys on the next video. Thank you for watching.
Thank you.